Welcome back to the Daily Nugget. Property insights, one topic, 20 minutes or less. Myself, Lawrence Lotze, and today joined by James Blair, a financial advisor. And James, the question to you today, or a little bit that we've seen around there at the moment, is the impact of the media, whether it's print or digital and everything else, on people's investment strategies at the moment. What's your thoughts on that?
So, Lawrence, we're talking to clients all day, every day, and very interesting to see how quickly somebody can get a assumption about something and then
Hmm.
take it. They've read something, they've listened to something, and then they start talking about it as if it's fact.
Yep.
We are in a recession. Interest rates are going to 10%. You know, talking about the war, whatever it might be,
Hmm.
and then the decisions that are made off the back of it in terms of somebody's own personal finances is fascinating. And I don't know if you notice when like you're listening to the news or you're scrolling through your feed and the amount of kind of KiwiSaver balances down, stock markets down, a lot of negative things which can impact how you feel about the world, right?
It's totally true. It's funny to talk about KiwiSaver. I was speaking just to my dad the other day about, KiwiSaver, what it is. And I said to him, by all means, for the next 12 months, don't look at your balance. Just don't do it. It's not worth it at all. It will correct itself at a later stage. But if you look at it in too granular level, you will feel a bit of hey, my money's actually going backwards. And it's totally true. I think people consume too much of it in too much of a small scale around their portfolio or their investments that they have.
And I think if you're thinking about what is the purpose of, without getting on too much of a tangent, about the media or what's their purpose of what they're trying to sell you, they're trying to sell headlines, they're trying to sell engagement,
Hmm.
and talking about bunny rabbits and how great the world is and rainbows is nice. But what really sells newspapers and interest is about negative things.
Yep.
Unfortunately, just kind of how we're wired.
So let's talk about New Zealand specifically around the media at the moment. Obviously, the biggest noise in New Zealand at the moment is the OCR has gone up, the cash rate's gone up, the interest rates have gone up, recession knocking close to and that sort of stuff. Is from listening to that noise, do we still have to consider it from an investment point of view, or do we just fundamentally block it off and ensure that the people we talk to, like financial advisors, guide us in the right point?
Well, we definitely want to be informed.
Hmm.
We definitely don't want to have our head in the sand. You want to understand what's happening in the world. But there's a great stat that's about 3.5% of all investors who try and day trade or time the market make
Hmm.
money. Very, very difficult to do it. I am not smart enough, Lawrence. If I was smart enough, I wouldn't be talking to you. I'd be, in the Greek islands on a yacht, right? So it means that someone like myself who's been in financial services for over 10 years can't time the markets. While you want to be informed about what's happening in the world,
Hmm.
I tell all of my clients that bad times are going to come, recessions are going to come, global financial crisis, pandemics, significant stock crashes. It's not if they're going to happen, it's when
Yep.
they're going to happen. If you have short-term goals, so say you put all of your money into crypto to buy a house in 6 months,
Yep.
you're probably feeling a little bit sad right now. So that was the wrong thing to do in the first place because you're
Yep.
trying to be a little bit greedy, take some short-term returns. But if you've got a long-term plan and you're thinking, what do I need my money to do for me over the long term? That's
Hmm.
where what happens in the short term is really irrelevant. The only thing you need to take into consideration, and this is especially at the moment around mortgage repayments. I don't
Yep.
know, Lawrence, if you've looked at what your mortgage repayments look like when they're going to roll off, but
Yep.
some people's mortgage repayments are going to, going from a 2% interest rate to a 5%
Hmm.
interest rate, which I know we'll talk about a little bit later. You've got to be able to weather the short term piece, right, and make sure you can get to the long term side.
Yeah, it totally is true. And James, great insights. If understanding, don't put your head in the sand. Seeing what is out there, and I think the big thing out there to anyone that's listening or watching at the moment is take a bit of the insight, see what's going there, and then reach out to your mentors, your providers, your advisors, and say, actually, what is the case? Can you clarify this to me? Hey, I saw this today. Is this true? And if it is true, what is my options around that in my investment journey? How does that impact me and then plan forward? And I think that's the big thing is where we we get consumed so quickly by the negativity that we forget to stop for a second and think about it, plan about it, and implement something about it that'll take away a lot of that pain and the stress that we see from investment journey overall.
Yeah, no, couldn't agree more.
Awesome. Thanks so much, James, for that. And for everyone else, thanks for coming over to the Daily Nugget. Property Insight, one topic, 20 minutes or less. And as always, hope to see you tomorrow.